What if I told you there's an investment that's been a store of value for thousands of years, has withstood wars, financial crises, and government collapses, and still offers tremendous upside today? That's right, we're talking about gold and silver. Despite their ancient origins, the fundamentals driving precious metals right now are anything but old news. In today's video, we'll uncover why gold and silver remain powerful assets, acting as hedges against inflation, currency devaluation, and geopolitical instability. If you're looking for stability, resilience, and long-term growth potential, precious metals might just be a good fit for you, and it definitely is over at Capitalist Exploits. Adding precious metals to your portfolio might just be a good bet, and we've definitely done that over at Capitalist Exploits. This video is produced by the team at Capitalist Exploits. Headed by professional asset managers Chris McIntosh and Brad McFadden, the team hunts for deep value assets that are surprisingly contrarian despite strong fundamental cases for potential future appreciation. If you're looking to gain access and insight as to the personal investments of active hedge fund managers and in-depth reasoning as to why they've invested in the assets they're sharing, check the links in the description below. You'll get access to advice on how to allocate, organize, and think about your portfolio, while joining a growing community of people thinking outside of the box. Enjoy monthly updates, open Q&As, regular newsletters, a community forum, organized portfolios, investing education videos, and more with the Capitalist Exploits Insider subscription. If you're not ready to fully take the leap, we also offer the Capitalist Exploits Insider newsletter series for $1 for the first 30 days and $35 a month thereafter. Do note, our investing strategy and philosophy can deviate a lot from the mainstream. We offer a money-back guarantee regardless, but make sure you're on board with our investing philosophy and global outlook before deciding to join us. In times of inflation and currency devaluation, gold is in a league of its own. Often called the ultimate hedge, gold's intrinsic value comes from its finite supply and its role as a universal form of money across centuries. As central banks print more and more money, the value of our fiat currencies declines, driving up demand for gold as a way to preserve purchasing power. Gold isn't just a hedge against today's inflation. It's a defense against long-term currency devaluation. With negative yields in traditional safe assets like bonds, especially in Europe and Japan, investors lose money over time. As bonds fail to offer real returns, gold's neutrality to yield and its price stability offer an alternative that's looking more attractive than ever. But it's not just inflation and currency devaluation that make gold and silver valuable. These metals offer security in a world that's becoming increasingly unpredictable. Precious metals, especially gold, have always been safe haven assets in times of global turmoil. Gold's role as a universal store of value makes it ideal during times of conflict or uncertainty. Whether it's trade wars, military conflict, or geopolitical tension, investors look to gold as a reliable asset that maintains value. Central banks are also turning to gold as a strategic reserve asset, especially in emerging markets. Countries like China, Russia, and Turkey are increasing their gold reserves as part of a move toward de-dollarization, reducing their dependence on the US dollar. This steady accumulation by central banks adds consistent, non-speculative demand for gold, reinforcing its position as a reserve asset. Silver also plays a unique dual role as both a safe haven and an industrial metal. While it provides stability in times of crisis, silver's high demand in sectors like electronics, solar energy, and electric vehicles means it benefits from both investment flows and industrial growth. But where does this demand leave supply? Spoiler alert, it's not keeping up. One of the biggest drivers of future price increases in precious metals is supply constraints. Let's start with gold. Major gold mines are reaching the end of their productive lives, and there's been a significant decline in new gold discoveries. Instead of investing in new exploration, large mining companies have focused on restructuring and shareholder returns. This underinvestment has led to a limited supply pipeline, putting upward pressure on prices. Silver, meanwhile, faces unique supply challenges. Unlike gold, much of silver's supply comes as a byproduct of mining other metals like copper, lead, and zinc. This means that if silver prices rise, supply can't quickly increase to meet demand. Furthermore, silver's industrial uses in technology, renewable energy, and electric vehicles add additional pressure, creating a scenario where prices could spike as demand outpaces supply. Lastly, the rising costs of mining create a natural price floor for both metals. For many operations, prices need to stay above a certain level just to remain profitable. This means we're unlikely to see a sustained collapse in prices, making precious metals a stable store of value for long-term investors. With this in mind, how can investors leverage these dynamics? Let's dive into the opportunities within mining equities. For those seeking even more upside, precious metals mining stocks offer a unique leveraged play on rising gold and silver prices. Here's why. When the prices of these metals rise, miners' profitability can increase exponentially. A small uptick in the price of gold or silver translates to substantial profit growth for mining companies, making them a higher reward option. Of course, mining stocks come with their own risks, from operational challenges to geopolitical factors. But by focusing on low-cost, high-quality producers with efficient operations and stable geopolitical environments, investors can minimize some of these risks. Established players are often seen as safer bets within this higher reward category. For those who want broader exposure without picking individual stocks, many ETFs offer diversification across the sector, allowing investors to benefit from rising prices without single company risk. But mining stocks aren't the only way to get exposure. Physical gold and silver provide their own set of advantages, especially when it comes to wealth preservation. While mining stocks offer growth potential, physical metals like gold and silver are about wealth preservation. Physical bullion, whether held as coins, bars, or in allocated storage, act as an insurance policy. In times of severe market disruption or currency crisis, physical metals provide security and liquidity that few other assets can match. Diversifying physical gold holdings across currencies, like the USD or Swiss franc, offers an added layer of protection, shielding investors from currency-specific risks. This strategy aligns with the goal of wealth preservation, creating a resilient portfolio that withstands economic instability. For those who see precious metals as a long-term asset, a patient investment approach is key. These metals are less about quick gains and more about securing lasting value. Holding physical gold or silver provides stability that the vast majority of financial assets simply can't replicate. But if you're looking to maximize the benefits of precious metals, don't overlook silver, the little brother to gold that's proving to be a powerhouse in its own right. While gold is often seen as the ultimate safe haven, silver offers its own unique advantages. The gold-silver ratio, which shows how much silver it takes to buy an ounce of gold, is currently at historically high levels. This suggests that silver is undervalued compared to gold, and there's potential for silver to rise faster than gold during a bull market. Beyond its role as a store of value, silver's growing industrial demand makes it particularly interesting. As the market for renewable energy, electronics, and electric vehicles continues to increase, silver is in high demand. This dual nature as both a monetary and industrial metal means that silver could benefit from both economic growth and safe haven demand. For those looking to build a resilient portfolio, a balanced allocation to both gold and silver offers broader exposure to wealth preservation and industrial growth. Gold serves as the anchor, while silver provides growth potential driven by both its traditional and modern-day uses. And if you're looking to broaden your horizons even further, there are also other metals in the precious metals category worth taking a look at. Beyond gold and silver, we have metals like platinum and palladium. These metals have strong industrial applications, particularly in automotive catalytic converters, where they're essential for reducing emissions. Platinum is also gaining attention for its role in hydrogen fuel cells, aligning with the modern-day green energy agenda. Then there are niche metals like rhodium, which have limited supply but highly specialized uses. While these metals carry higher risk due to their volatility and smaller market size, they can offer substantial rewards for sophisticated investors with a high tolerance for risk. So, what's the takeaway here? Precious metals, gold, silver, and even platinum and palladium remain essential assets in today's world of economic uncertainty. They provide a powerful hedge against inflation, currency devaluation, and geopolitical instability, offering both wealth preservation and growth potential. Precious metals aren't just relics of the past. They're essential, future-proof assets that can enhance any portfolio. So if you're looking for a safe haven, a hedge, or a growth play, precious metals might just be what you need. Don't forget that precious metals are one of the many themes or portfolios that we have organized in the Capitalist Exploits Insider Members section. To gain access to the specific plays we're looking at, and even more in-depth rationale about the precious metal industry and what we think of leveraged plays versus physical holdings, check out the links in the description below. The research used in this video is available in the description below as well, and thank you so much for watching, and remember to stay informed.